You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by Cboe. Cboe is one of the world's largest exchange holding companies, and we're inspired every day to innovate some of the industry's most powerful products, technology, and solutions. We're the industry's leading force driving access to global markets, a better trading experience, and powerful data and analytics to inform better strategies. We're committed to engineering new ways to help our customers realize their potential and navigate the marketplace of tomorrow, today. Visit Cboe.com. That's CBOE.com to learn more about our expanded offerings. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. Welcome back to Volatility Views, the premier program for volatility traders. My name is Mark Longo from the OptionsInsider.com. A fun place to go if you like reading some options content. I'm guessing you do, because you like the show. A lot of volatility stuff up there, too. So make sure if you haven't been over there in a while, head on over, check it out. Of course, you can always stream the full network there as well. It's all there. It's a call out on the right-hand side of the homepage, so you don't miss it. Just pick your favorite show, click on it, and you're off to the races. The full archive's available there, so if you're going to another place, like let's say in iTunes, and maybe they limit you to the most recent 50 episodes, and you really want to dive back into the weeds, and I know you guys do, because I see the numbers, I see what you guys listen to, and all the old stuff. People love that as well. So the easiest place to find all that, if you search for something, is our website. Full archive, scroll down, Control F, search for whatever you got to do, and you can find the episode you're looking for. And of course, you can always join us live every Friday, noon Central, 1 p.m. Eastern, via the old Mixlers, MIXLR. Just grab that link via our social media, wherever else you get our content. Set it and forget it, or follow us on Mixler, and you'll be notified, not just for this show, but for TWIFO a little bit later today, for Option Block throughout the week, some of our live shows, our interviews, the other fun surprise content we sprinkle into that feed throughout the week. You never know what you're going to get, so follow us over there on Mixler, and you too can get a nice little surprise in your day throughout the week. And of course, however you listen, live after the fact, hit us up. Questions, comments, insights, pearls of wisdom, your own. Maybe you have a different view on the VIX whale or something else that's going on out there. Hit us up. We do like to hear from you guys. And joining me on the old program today, we got the usual cast of characters plus one. Let's start off. Let's see. I think he's down in the mecca of volatility known as the Cboe in his former corner office. Now I believe he's in the janitor's closet in the basement. Mr. Russell Rhodes, the man about town still over there at the CBOE. I don't know what your new title is yet, Mr. Rhodes. Maybe you don't. Welcome back to the show, though, nonetheless, sir.
Do we have an hour for me? I was looking up my title. I was actually just trying to grab a piece of paper and read the whole thing to you because it is awful. It's Director Product Advancement Cboe Global Derivatives Group for Cboe Global Markets.
Wow. You're right. That is bad.
That is like the world's longest title.
Do they give you a second? Do they give you a second business card to print all that? Here's 2 business cards. You need both of them.
I think that's a hint that when I get my PhD, I need to be going somewhere else.
I think that's a hint that anytime there's something that's hard or somebody has to think about and they want somebody else to do the work, they'll find it technically can fall under your department and they can give it to you. That's
pretty much
theory.
it. I'm the guy in the little bitty room that one of the sales guys sends an email to and says, tell me what kind of volatility environment buy rights work best in. And then I run some numbers and come back to them, and they call up their client and they say, see how smart I am? I figured this out for you.
So if you don't mind, I'm going to keep calling you Man About Town because there's no possible way I can remember the density.
You have to look at my social media. You don't know about my physical ailment, do you?
I heard you ran into a sign.
Hurt. So I'm going to tweet a picture.
Right? The beard is what threw me off. I wasn't even sure if that was you.
No, it was me with the blood all over my face. I've got I'm actually got a concussion. So if you want honest answers, today's the day.
Oh, today's the day. Let's put it.
No filter.
Let's put it to Russell today then. All the questions we've always wanted to ask, but now that he's bloody and concussed, perfect time to put it to him. Take advantage, listeners. Hit us up while you can. And also, you heard that tinny voice. I don't believe he's freezing in a Costco parking lot or dying somewhere else in some horrible thing. He is apparently alive and joining us today. Mr. Greasy Meatball from Parts Unknown by way of Option Pit and Carmen Line and the forthcoming Prime Meridian Fund. Mr. Meatball, welcome back to the show, sir.
Yeah, it's good to be here. Boy, I leave for a week and everything goes to hell in a handbasket. What the heck?
Yeah.
When I left, the VIX was below 10 and all was right in the world. And now I'm back and the VIX is 12 and the whole world the government is falling apart. Just goes to show you that when Mark Sebastian leaves the United States, bad things happen. So there you have it, folks.
You know what we're doing? We're taking the first creeping steps towards my end-of-year VIX prognostication, which was pretty lofty. So we need to get the ball rolling on. I'll take the hit for my weekly prediction if it means my yearly one is correct. And so I'll happily take that hit. And last but not least, joining us in the co-host special guest seat today, you may know him from his appearances on the Advisors Option. He's been on this program before as well. Mr. Matt Amberson, the founder over there at ORATS. Matt, welcome back to the show, sir.
I'm proud to be the +1 again, Mark, with this great crew, Russell and Mark. Good to talk to you again.
All right, we got a good crew assembled. No one's freezing to death. Mark not in a Costco parking lot. Matt not in the frozen, at least not yet, not in the frozen expanse of New Hampshire. So let's get the ball rolling and dive right on into our volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Vol Review, the portion of the show where we do, surprise, surprise, we review the week that was and indeed still is from a volatility, trading, and trending and activity perspective. As Mr. Meatball alluded to, unless you've been living under a rock, you know we've a little bit of a different regime for VIX, at least this week. We'll see if this persists or we go right back down to the single-digit regime forthwith. But as we are recording and streaming this show live, we're a little bit after noon central here in the one true time zone. VIX holding right around 11.5, so firmly into the double digits. We hit, I think, about 1240 yesterday, I believe, somewhere along those lines. And 1221 was the high today. So we keep flirting with that 12 handle, which seems just like a ludicrous amount of volatility at this point. We've been so beaten down to expect just an 8 handle settlement recently in VIX land. So once you see that, you know all bets are off. And yet here we are with this ridiculously lofty level of all things VIX. And Matt, you picked a good day to guess and a good week to guess because a lot of stuff going on. You're our guest, so I'll give you pride of place while Mr. Rhodes and others recover from their concussions. What caught your eye in this pretty active week from a volatility perspective, sir?
What caught my eye is the VIX going up, but the realized volatility, and we have different ways of looking at realized volatility. One of the ways that we do, close to close is pretty typical out there. But what we do is look at intraday, and we'll simulate what we used to do down there in the pits, gamma scalping all day and seeing what our profit is and seeing if we made money on our options. So we simulate hedging during the day, and that's actually been still in the sixes SPX. So, there's a lot going on in Washington, as Mark alluded to, and thank goodness he's back to put a stop to that.
To bring a sense of calm to the world, right?
Everyone's he should. Were you in Davos with or now that you're back? But it still looks pretty tame out there, except for the VIX. I don't know, guys. What do you think?
Yeah, it does look tame. We're still sitting at all-time highs. I think we're presented with kind of a binary event here. Binary one, they get a deal passed, and this is just for like Monday or Tuesday. Eventually, they're going to get something passed, and this whole VIX run-up will be thought of as really stupid. But option one, or Mark, stop me if you want me to wait for this. But option one, we run. They get a deal done. The SPX rallies, 5-6 points on Monday, maybe 10, 28-10, 28-15, VIX to 10. Everybody's happy. Option two, we drop $40-50, VIX to 17 or 18. Lawmakers poop themselves. Deal signed by Wednesday. VIX back to 10. S&P to 28. 10, 28, 15 next Friday instead of next Monday. That's but in between there's a whole lot of crapulence. So basically the road to 28, 25, is it going to be a smooth straight line, or does it involve taking borderline taking the drive between Santa Cruz and Santa Clara? That's kind of, is there a huge mountain in between everything?
So we have lawmakers pooping themselves. We have lots of crapulence in the government. Mr. Rhodes, I know you're concussed, but do you have any scatological metaphors you want to bring to bear with us, sir?
What? No. I part of me doesn't think this whole run-up has been all about the potential government shutdown. I think it's about the market being overvalued and people being a little bit concerned that we can't keep having a repeat of what we had last year or the last couple of years this year. So I think the only people that are really excited about the government shutdown is the financial press, because they got nothing else to talk about.
Well, it is clearly feeding back into something, because you're right. This run up. If you pull the government shutdown out of the driving factors of volatility in the space, ain't a heck of a lot else really move. I'm with you there on the fear of a sell-off, but we've been saying that for a year now, and none of that has really materialized into any sort of appreciable move up to the upside, at least in the VIX. We've seen nuclear bombs fail to do it. Everything else has failed to do it. So apparently the machinations of Washington are what could potentially do it. Who knows? It's the most sensible driver I've seen or argument I've seen for what is driving out there. But Matt raises a good point. Even with all this talk of lofty VIX, realized vol still effectively anemic. Which brings us to discussion. You talk realized vol. We also talk the volatility of volatility itself, a.k.a. our old friend VXX, which is, of course, well, actually, that would be VVIX, but of course, our old friend as well is short-term VIX as well, which is VXX. And before we get into that, let's get in. I know, Russell, you guys have some, so I guess you can call it breaking, maybe late breaking or breaking earlier this week type of news developments over there in VXX land. Do you remember what it is, sir, or do I need to refresh it for you?
No, I totally remember this one, because I've known it for about 6 months and I haven't been allowed to talk about it. But the new version of VXX and the new version of VXZ, which are trading with the symbols VXXB and VXZB, started trading today. They are the replacements for VXX and VXZ, which are 10-year bond structures that expire next, I think, the last day of January and the first day of February next year. So they're going to start trading side by side. The VXXB, last I checked, had only done a few thousand shares. So I'm sure it's going to take some time, but they got a whole year for the volume to work its way and the assets under management to work its way from the old school first. We should have some sort of special show when VXX is retired at the end of January next year.
Are they going to list options, Russell, relatively soon, or are they going to?
Well, you know how that works, Mark.
Yes,
it's a volume thing. You got to have 2,000 unique holders, a certain amount of money under management, which they actually have reached that already. I think you need to have 100 million. And you got to start doing a certain volume. The volume's not going to get us there, but Peter Lusk at the Options Institute, my former employer, is the knower of all things new listings, and he is putting together a blog that will explain what it will take for VXXB and VXZB to start getting options. Do notice that VXX does not have any options past the leaps that expire in January of next year, and that
I do notice that.
And people have been beating me up. Why not? And I've had to say, I don't know, even though I knew what was going to happen. I hate non-disclosure agreements, especially when I've had a head injury.
Speaking of your injury,
no, I agree. We hate those too.
Speaking of your injury, I'm very distracted right now because I'm looking at your social media just popped up on my screen. I'm seeing this big image of you just bleeding all over the place. What the heck happened to you? Very quickly, briefly.
I got hit. I was dodging a car that almost hit me. And as I jumped behind the car, a garage gate came down and smacked me on the head.
Oh, wow. This was out like in the burbs.
Getting hit on the head with an aluminum bat.
Oh, jeez. So at least you
That's not very fun.
Mother? Where are you, Mother?
At least you dodged the car. That's probably the important part of the equation.
It could have been a lot worse. So
I'm glad you're okay.
If you want
I've got a badass scar that's never going away.
If you want a nice grisly dose of something with your morning volatility, make sure to follow Mr. We won't retweet it for the sake of decorum, listeners. You can go find it for yourselves, but it's visceral, shall we say, to say the least. I don't know. After looking at that, I kind of have my doubts, Mr. Rhodes, if you're up for the next segment, but we shall try it. We'll give it the old college try. Nonetheless, it is time for Russell's Weekly Rundown.
Now, Russell's Weekly Rundown.
All right, sir, have at it. If you only have a few pages worth of stuff, it is understandable given your external extracurricular activities this week.
Well, I tried really hard, and I couldn't find any trades from Monday, so we'll go right to Tuesday. Tuesday, there was a buyer of 750 of the Jan 24th 10.5 puts for 41 cents, who sold 750 of the Jan 24th 9.5 puts for 6 cents. They paid 35 cents. Settlement next Wednesday, this coming Wednesday, I guess, a below 10.15. Will turn out well for them. They may have been a little early on trying to put this trade on. They can make as much as 65 cents if we get one of those settlements below 9.50. Somebody came in a little bit later with a short-term bearish VIX trade that I like better than the first one, and I love the odd lot here. Somebody sold 896 of the January 24th 10.5 calls for $1.35, went up 3 points to the January 24th 13.5 calls and paid 50 cents for those. Took in 85 cents, so anything below 11.35 works out for them. Anything below 10.50, and they get the full credit of 85 cents. And then finally on Tuesday, the first trading day of the week, we seem to have most of the trades. Somebody sold 100 of the Jan 24th 10 puts for 14 cents. And bought 100 of the Jan 24th 10.5 puts for 28 cents. They paid 14 cents, and they ended up, as long as we get under 10, they can make as much as 36 cents. So a risk of 14, a reward of 36. Again, with what the market is doing, they may not be in the best of shape on that trade right now, at least. But if we are able to if we go with Mark Longo's thinking, and the government does not shut down and volatility crushes, these trades will be all right. Wednesday, there were a couple of butterfly call spreads, and one of them was going one direction and one of them was going another direction. I don't think it's the same guy because they're different sizes, and they use different strikes as well. But starting out, somebody bought 200 of the June 24th 14.5 calls for 35 cents. They sold the 12 call. They bought 200. They sold 100 of the 12 calls for 67 cents. Sold 100 of the 18 calls. It's a little bit of a lopsided butterfly. They sold the 18 calls for 17 cents. Took in a 14-cent credit. If we stay under 12, they're in good shape. I assume if we get some sort of volatility spike, they'll try to trade out of that thing. If we get a big move above 18 and they hold on to it, I'm not seeing that. But if that happens, they would actually end up making the 14-cent credit as well. Personally, I would consider a different structure, but I'm just reporting on them, not trading them. Somebody bought on Wednesday again. Somebody bought 150 of the Feb 21st 13 calls for $1.29 and sold 150 of the Feb 21st 17 calls for 69 cents. They paid 60 cents for this guy. They do well if we're above 1360 at expiration, or we get a spike between now and then. I think Mark Sebastian pointed out to me that the way the curve is looking right now, that Feb 21 was a little elevated.
It's jacked up. It is jacked up.
Somebody's expecting something in there. And that was just, we were talking earlier this week. We do talk. Mark is my number one client now.
Ooh.
Another call butterfly, but going the other direction. Somebody sold 100 of the Jan 24th 15 calls for 27 cents each. Bought the 12 calls for 61 cents, bought the 18 calls for 13 cents. Nice textbook looking even butterfly here. It cost them 20 cents. Break even between 12.20 and 17.80 at expiration. Of course, if they get right up to 15, they're in great shape on this one. But one person, buying a call butterfly, one person selling it. Things got really quiet as the week went along. Thursday, just one trade worth talking about. Somebody sold 112 of the Feb 21st 12 puts for $1 and a penny, and bought 112 of the 14 puts for $2.46. Paid $1.45 for this trade. A settlement under 12 yields a profit of 55 cents. The way things have been going, the recent history, that's probably not such a bad idea. And then finally, and I got interrupted halfway through. Somebody walked into my office that I hadn't seen in a long time. And I got distracted halfway through writing up this trade. So I got to do the math in my head. Somebody sold 500 of the 11 puts, the January 24th 11 puts for 27 cents, taking in a credit of 54 cents. And then they bought 250 of the January 24th 12 puts, so a 2x1, I'm going to just call it that, for 86 cents. So they paid 32 cents. I don't know what they're trying to do here. Mark Sebastian, was this your trade?
That was not my trade, but I'll tell you what I've been doing. I just cannot. I think something's really jacked up. Now, I've looked through the events around February 21st. There is a Fed minutes that Wednesday evening. All right. However, Fed minutes can be important, and I know we've got interest rate policy that's up in the air, but there's just something wrong where the Fed regular that's on the 14th would be 12, March would be 12.65, and the Feb 21s would be 12.5. There's just that structure doesn't add up. And one of two things has to happen. I think you either need to see the Feb 21s drop or the Feb regular, and more importantly, I think the March rally, because, it's one thing for, unless we really think Feb minutes matter that much, I have trouble seeing them worth 50 cents in the future.
Yeah.
Especially at a price of 12.5.
When's the last time Fed minutes really merited that much of a premium? It's been
a while.
It's been about at least a year, right?
Yeah, but let's not forget we are going through some pretty big, decently big Fed policy changes. So, there's always the possibility that could be it.
Well, it wasn't it this week in the big mothership VIX options, that's for sure. A pretty active week, despite the fact that it was a truncated week. Monday, of course, closed for the holiday. Despite Russell's concussed efforts, he could find no trades there for Monday. I couldn't as well, and I was clear-headed all week long. So let's kick it off on Tuesday. It was Tuesday. People made up for lost time doing nearly 2 million contracts on Tuesday, 1.92 million contracts. So they got all their Monday's action in and then some. The ADV's hovering pretty rich right now, right around almost 750,000 contracts. So pretty much almost every day this week, except for Thursday, leaning north of that. Wednesday, 887,000 contracts on the tape. Thursday, 664,000. Today we're looking 366,000 as we're going into about halfway through the show here. So we'll see. Remains to be seen if they break that ADV or not. Either way, though, Mr. Rhodes, if he wasn't so concussed, I'm sure would be very nervous because that VIX call put is ticking on up to the north side, moving on up to the east side there with 4.6. So we're well north of 4 now. I know the 4 handle is where he tends to get a little bit nervous and flop sweaty, more so than usual, at least for him. So he is at this point extraordinarily nervous. You know who might be, or perhaps not, when we get to the analysis of his trade in a minute, is our old friend, the VIX whale. We know he struck recently, setting or close to setting new records pretty much every time he trades this time. He's been rolling this trade. He's been doing all right on it. We'll get to that analysis again in a minute. But once again, the top 10 hot VIX strikes out there in terms of big, sizable open positions. He's dominating that list yet again. Number one with the bullet is his buy 2 leg, the Feb 25s. Remember, he has the 12 put with the 15 call, and then the 25 calls as the 2X kicker on that. 567,000 open on that strike, listeners. Number 2, the Feb 15s again. Thanks to our old friend, 553,000 open there. That's not all him on that strike. So some other players have clearly discovered the merits of the Feb 15 strike as well. Number 3, actually, is not our friend. It's the Feb 22s, 422,000. You got to go all the way down to number 4 to find the third leg of that 3-way whale trade. The Feb 12 puts, 369,000 contracts there. Number 5. The March 22, so that 22 strike getting a little bit of popularity, 338,000 open there. Number 6, the Feb 20s, 279,000. Number 7, the Feb 17s, about 275,000 open there. Pretty much nothing under $250,000 this week, so pretty hefty strikes out there. Number 8, Feb 19s, 271,000, pretty much almost exactly tied with the Feb 16s, the ever normal Feb 16s, not a crazy strike at all. 271,000, round out the top 10. The March 16s, 256,000. OI coming off a little bit since last time we all gathered around here. About 10.1 million contracts open, about 8.3 on the calls and about 1.8 million on the puts. Now, there's a question a lot of you have been asking us on the show for the last few months, actually. We've been talking about our friend, the VIX whale, keeps rolling this, 12 put with the 15 call by the 25 calls 2 times and doing that. And whenever he does it, he puts up well over 1 million contracts. And it's a big deal. But he's been rolling this trade for some time, I believe, since last summer. So a lot of you have asked, hey, how's this? I mean, obviously, we don't know what else he has on. But on the option leg, at least, how is all that kind of working out for him? And I always think when those kind of questions come in, I could do that myself, but it's always better and faster and, quite frankly, easier for me if I can get someone like Mr. Rhodes to do that. And that's exactly what he did. Very charitable of him to do that analysis for us listeners. This weekend, over there on the SIBO blog, Mr. Rhodes, regale us, if you will. I know I'm giving you a lot of work to do this week when you're concussed. I promise I'll take it easy on you after this. But regale us with your tale of how our friend, the VIX whale, has fared so far. So far, actually, it's not looking too bad. Uh-oh, did he pass out on us, Mr. Rhodes? Are you there, sir? Uh-oh, I think the concussion has reached him. Paging once, and soon, if I call him Dr. VIX, will come in. Dr. VIX, are you there, sir? Oh, you know what? I guess we lost Dr. VIX. Well, you know what? This is a perfect opportunity then, while we get him back, to have our guest co-host chime in. Because I know, Matt, what you guys do over there at ORATS is pretty much take these kind of trades and crank them out and back test them and look at them from a bunch of different ways. And the other question we've been getting quite a bit is, how does this type of trade usually stack up? How does it usually perform out there in VIX land? We've talked before a lot about the very popular 1x2, sell 1x2 in the call side, and that seemed to have worked out pretty well until it didn't. And so now the other side of that coin is Mr. How is this one working out, Matt?
Yeah, so I looked at, when you gave me this trade, the short one VIX 12 put, long one 15 call, short 2 25 calls. So those it's about 90 days to expiration. So in our back tester, we treat the short VIX put as one strategy, and the 1x2 is another strategy. Then we have a way to combine strategies I'll do it 50-50 in this one, but you could do it in various ratios. So shorting a put of 90 days, for example, has not been a very good trade in the VIX. We run this from 2007 on, and it's a loser about 10% a year. And then if you then look at the 1x2, so what we do is we look at a percentage. I did this as a percentage of strike. You could also use delta. So that put is about 90% of what the VIX future was on the 21st of July, for example, and for the October future. And then the VIX 1x2, the one is about 10% out of the money, and the 2 is about 85% out of the money, out of the future money. So if you run that back test, that's also poor. And then if you combine them, they're both down. They're both down about 10%. So that's a pretty tough headwind from our back tester that we did. So I think that's a tough trade to put on from a historical perspective, Mark.
Yeah, it's one you look at it and you kind of got to wonder. You scratch your head a little bit. Certainly, it hasn't worked out too terribly, at least yet, for our friend out there, the VIX whale. And I was going to break it down, but I think he's recovered from his immediate swoon, listeners, and he has rejoined us. Monday Corner Office, Dr. VIX. Are you there, sir?
Yeah, I'm here. My wireless card actually got scorching hot and died.
Oh, sure. That's what we're calling it now in the post-concussion world. We're calling it overheated wire. Okay, we'll take it.
Yeah.
I was about
they blocked me from talking to you on Skype here at work.
Well, that's understandable. I would block.
I have to rig a couple of things here.
Well, I had just right when you dropped off, I had just tossed to you about your very interesting breakdown of the VIX whale, how he's doing so far with all of his rolls. Matt just broke it down for us historically, kind of backtesting how this trade works out. And historically, it ain't looking that great. But your analysis here shows our friend here hasn't done too badly. Want to walk us through it?
Well, I mean, he's been able to roll it. It started out with a 20-cent credit when they first put it on back in July, I believe. It cost him 20 cents to roll it, so he was at break even after the second roll. It cost him 20 cents to roll it on, I think, December 1st. I actually missed that one because I was at our risk management conference. And then this last time, I think they waited a little bit longer than I waited a little bit longer than they normally do to roll it. I think maybe the holiday season got in there and kind of mucked up what they normally do, because they usually do it like sometime between the 20th and the end of a month. And this time they did it right after the new year. But it cost them 30 cents to roll this time. And so they've still got the trade on. They've still got 50 cents of debit now going from an initial credit. And they're really, it looks like they're just holding out for some sort of volatility event. We know, those of us on the line right now know that this isn't the only thing they're doing. They've got, this is actually kind of a smaller part of a much larger book that they are running. So, just because this thing hasn't worked so far doesn't mean that they're not doing particularly well in other places.
No, yeah, I think we all know there's other shoes waiting to drop out there, and probably have done all right on that leg. The options leg, probably additive hedging, complement to what they're doing out there. Before we roll on from VIX options, Mr. Greasy Meatball, I know you've been traveling hither and yon and sometimes freezing to death in Costco parking lots, but aside from all that trauma, anything catching your eye in the mothership VIX options this week?
Yeah, just settle was kind of crazy. We settled 1262, There's been a lot of trading. So things are really active right now. And I think you're dealing with a market that is definitely kind of caught off guard, I think, by this move until, up until Monday, we were pricing this stuff like it was going to be like they were pricing VIX like it was going to be settling at like next to nothing.
Yeah, this was almost a 4-handle move between settles. We were in the 8-handle last time, and now we're in a 12-handle. So I would ask Mr. Rhodes, if he wasn't concussed, how much that nearly 4-handle difference between settlements racks up historically, but I won't put him through putting through those hoops. Instead, let's move on to, I know a lot of you guys are excited, and rightfully so, to have something concrete to sink your teeth into these days. When we were talking macro, weird things like government shutdowns, all those kind of things, sometimes it's nice to have a nice concrete earnings number to sink your teeth into. And we're getting into that season again, so it's kind of nice. So for all of you who are like, yeah, I'm sick of tweet this, government shutdown that, North Korea this. Here, you can look at some names instead. And when we got that for you, kicked off last Friday with some of the financial names coming in. We had more financial names reporting this week, including Goldman and Bank of America and others. And yesterday after the close, we had good old IBM, which was kind of noteworthy and interesting because we had talked before about that analysis from Cowen & Company showing over the last 2 years they priced in, they had a move of about 4.2%. Is what they kind of have moved post-earnings, and that's pretty much exactly where that straddle went out going into the earnings. It went out right around 4.2%. So they were pricing in about a 7-handle move, about $7.20, and pretty much that's almost exactly what it moved in the after hours. It was pretty impressive. So the straddle pricing was down to an exact science, and at least in the after hours, it worked out pretty well. Looking here intraday, it has, now that we've opened here in IBM holding at about 161 and a half. So that's off about 7 handles. So pretty much right in line with what they were pricing out. So it was one of those oddly impeccably priced straddles. Neither winners nor losers really did well in that. I don't know how many, let's see how low it got, how many scalping opportunities you had therein. If you were long some vol, perhaps you had some opportunities here, but I don't see a lot of, well, it actually got as high as 165 today. So you had a few scalping opportunities intraday. So if you were long premium, you can't really argue too much either. You had some scalping opportunities there. This is kind of kicking off. We have more big names coming out next week on the docket, which is kind of interesting. I'll have to send this to you, Russell. You were on the show last week at this chart we have from Cowen & Company, because this is kind of exactly what we were talking about before. I've joked with you about having you do this analysis. They saved you the time, and they went through and kind of did a straddle study for recent quarters for names in terms of the implied move, the actual move, and I'll send this data to you so you don't have to bother crunching yourself, particularly now that you're in your shall we say, your injured state. We don't want to have to stress your brain too much, but there is some interesting data on this. So it's nice to see that someone, after years of us lamenting it on this show, the lack of data in this space, particularly around earnings, which is whenever all of you guys want it, the dearth of data there has been kind of annoying. So nice to see that we're getting some more. But next week is the big names. Really quickly, any of you guys, Matt, Mark, or Russell, any names catching your eye this week that you thought were worthy of breaking out from a volatility perspective?
Yeah, I got one.
Go for it.
So ORATS actually puts together that type of information every day. We've been doing it for 9 years, so I should have been giving it to you, Mark. What I see next week is a very highly priced implied volatility market. 150% of average absolute moves. So what that means is the implied move, and I'm going to point out symbol T. They are implying a move of almost 5%, and historically they've been moving. The absolute average percentage move on earnings is 2%. So a couple 100% above what they're normally moving, and T is typical of next week. Like I said, on average, our names are about 50% overvalued given the average absolute move. So that's what I'm seeing, Mark.
So you're telling me you've been sitting on this data all this time, and I've been lamenting it on this show, and I just don't have it? You're killing me, sir.
You got to invite me back more often.
I guess. Here I've been saying for years, I've been tried to con Jared into it years ago. I tried to con Russell. I offered him a whole $5 to get him to do the report. He didn't bite. So yeah, here I just I needed to just dig into the ORATS data. You guys have it. There you go, listeners. Head on over to ORAT or follow Matt on Twitter at OptionRats. It's not the rats you're thinking of. It's ORATS there, and you can find some of this cool data for yourself, because this is the season when you want it. Earnings season, you want to see just how things stack up historically, see what they're pricing in now, and that's when you find some interesting, shall we say, abnormalities, and that's when things get off. Speaking of abnormalities, before we get into some listener mail, really quick, we can't talk all things abnormal without talking about just Bitcoin. Oh, what a start to the year for all things crypto out there. I have the sell-off stats from just Tuesday alone here. We saw what was it? Bitcoin off 20%, Litecoin off 19%, Ethereum off 22%, Bitcoin Cash off 24%, and Ripple off a whopping 35%. I do know Ripple regained a lot of that just yesterday. A lot of the names have. So talking about volatility, it's out there in spades. I did have a chance, actually, Russell, to ask your CEO this week the question that everyone's been asking us here on all of our shows for months now, is when we're going to see options on these things. And at least according to him, he said he wanted to see a few more settlements in the books. Of course, the Jan futures just went off the books this week, so that's the first real settlement they had under their belts. They understandably want to get a few more before they do something like that. And he also mentioned a point which we hadn't thought of here, which does seem to lean towards my guess of around Q2, which is they want to complete the migration to the BATS technology before they do something like that. So for all of you out there who are writing in and guessing in our polls that we're going to see, at least on the SIBO side, options on Bitcoin anytime in the next month or two, unfortunately, it doesn't seem that way. That said, Mr. Rhodes, we just had the Jan contract go off the books, the first kind of complete contract life cycle. Anything really stand out to you in Bitcoin land on this?
No, I mean, it went fairly smoothly, and I'm not just saying that because I work here. They do an auction. The guys over at Gemini, the twins, they do an auction at 4 p.m. 6 days a week. They don't do a Sunday auction, which basically is a kind of like we used to do an opening rotation type of process, where they're soliciting bids and offers over a 10-minute period, and then they're coming up with a big old crossing trade that happens at 4 p.m. Eastern. Normally, they'll have, on a good day, they'll have 10, 20 Bitcoin be the amount of the cross. There was 616 on the cross the day of our settlement. So that's a pretty nice sized trade, a lot of liquidity. There's got to be, a lot of participants in there. And the price was between kind of the bid and offer prices that you can get from all the large exchanges. So it was as smooth and orderly as we could have hoped it would be.
Matt, I know you're big on all things crypto. I hear you might be selling some land in California in crypto denomination. What are your thoughts on this first cycle, A, of Bitcoin futures, and then B, kind of the turbulent, frothy week that we saw out there in all things crypto?
Yeah, well, we discussed this on the advisor option, how it did seem a little bit heavy. The price, they kind of zoomed up pretty good, but, the volatility has come down, and I really liked Russell's comparison of the VIX volatility to Bitcoin's volatility. That was, I think I stole that for one of the advisor options, so I'm coming clean here. And but one thing I did want to say is yesterday or the day before, the SEC released two ETFs, Block, BLOK, and BLCN, but they won't let them put blockchain in the name. So SEC.
That's a first.
Yeah,
I've never heard that before. That's awesome.
So I listened to an interview with a blockchain BLCN guy, and he goes, "Well, we're hoping that they figure this out and and let us do it later on. So anyway, I thought that was a pretty interesting call, and that might foreshadow how likely the options might be forthcoming, Mark.
Yeah, they haven't been big fans. I know they rejected ETFs in the past, and hence the move for everyone to go CFTC first on the future side. SEC seems a little bit more reticent on the approval, so that could also delay things as well. So factor that into your next poll we ask you guys about when the options are coming. Speaking of asking you guys, it's that time of the show. It's time for the Volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the Volatility voicemail. Make your voice heard by dialing 779-669-4VOL, posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, before we get to our question of the week, we got a listener here in the live chat. Going back to what we were talking about earlier with VXX, the Jack77, he said, looks like to him both VXXB and VXZB seem to be optionable already, at least as seen through IB. So, Mr. Rhodes, is he seeing things, or is IB just jumping the gun here?
I will get on my IB account and see, but I didn't see that. I tried to pull up options in a different way and wasn't able to do it. But I will check on that. I would be actually surprised. I can never recall something having options the first day that it was listed. So
no, it's always nine days or something like that usually.
Well, at minimum, it's like you got to do a certain average volume, and I'm going to use a hypothetical number here. Let's say your average volume is supposed to be 100. And it's like average monthly volume or something like that. And you do 3,000. Well, your average monthly volume is, even if you don't trade another contract or another share, hits that average. So that's why options come out more quickly for like something like Snapchat, which was the last big one where we got a lot of these questions. I'm going to get on my IB account and see that, I would be surprised.
I'm on Thinkorswim at TD Ameritrade, and I see markets changing, but I don't see any volume.
Okay. Well, that's kind of...
no, I take that back. I see
they are trading?
Wow. I see a 9 lot.
Oh, my
There we go.
Gracious.
See, we have keen-eyed and keen-eared listeners on there, spotting stuff for us. Since we were talking before, since we're all thinking wistfully about all things options on crypto, we asked you guys earlier this week, right when the futures were hovering around 11,500, we said, it doesn't seem like we're going to see options for a while, so let's play the wishful thinking game, and let's pretend. This is role playing. Let's pretend the options exist. So if they existed, futures around 11,500. Let's say you had 1 month to go for your trading, and options existed. What would you do? Would you buy a 5% out of the money call? Would you buy that 5% out of the money put? Would you sell a 5% out of the money covered call, or would you just say the heck with it and just short the future? Let's see. Let's go to Mr. Meatball first. What is your vote, and what do you think our audience is picking, sir?
Oh, I think if anybody who had enough interest in that to actually vote thinks it's going up forever. So I'm going to say just buy the future.
You mean buy? We don't buy the future. We have buy a call, 5% out of the money call. So I'll put you down.
Buy a call.
I'll put you down for that one. That's our bullish choice. And Mr. Matt, I think you have a glimpse into this from yesterday, but I'll let you guess anyway. Have your thoughts changed since the advisor's option, sir?
Yeah, of course. I just figured out, if the Bitcoin options are priced like the VIX, for example, I'm going to sell that put. You're going to get a lot of money. So that's where I am right now, Mark.
I wish that we thought about putting that in the choice. I'm going to put you down for the synthetic alternative which is selling that 5% out of the money covered call, because we figured we only have 4 choices. It'd be redundant to sell the put and the covered call out there. So we opted for the latter. So I'm going to put you in for its synthetic brethren. Last but not least, Mr. Rhodes, what are you feeling in your concussed state, sir?
Oh, buying the call. I'm going with Mark Sebastian because he's paying more attention down in Jamaica than I am trying to recover here.
In your hospital bed. Well, there is a certain logic to that. I kind of felt that this would be kind of all one way, either all buying the call or maybe buying the put usually. Our audience is actually fairly evenly split. It was a lot tighter yesterday. It seems to have widened out a little bit today. You got about 2 days left, listeners. So by the time the podcast comes out, this poll probably will be done. But in terms of live and people on the network, you guys can still vote. 35% saying buying that out of the money put, and just it's one of those things. How many people hit us up this week saying, why, oh God, why couldn't there be puts on Bitcoin this week? How great it would have been. And I know, I'm with you. I feel your pain. 35% of you wanting to buy that put. 27 coming in hot on his heels. 27% saying buy that 5% out of the money call. 23% saying the hell with it, I just want to short the future. And 15% going Matt's way, wanting to sell that 5% out of the money covered call, a.k.a. the selling the put there. We had an interesting the StockTwits guys sent it over to us, and I'll have to maybe put in the show notes. It's hard to describe a picture. They sent over this picture of what they're seeing from the crypto. It has a picture of a car, and it's going off and on, like just spinning tires to turn hard off an on-ramp, and the sign on the highway says, sound financial decisions, and you keep going straight, and to the right is all the crypto, and he's just burning his tires to go to the right. So I don't know. That one kind of made us chuckle, just because there seems to be a lot of that as well. Oh, Jack from the chat chiming in and says he also sees it on Thinkorswim as well, Matt. It's the options for VXXB. So clearly these things are out there, and we'll forgive Mr. Rhodes because he is a little bit concussed. Some of these other questions a little bit more involved than we have time for. Here's a quick one from that's more of a comment they sent in. These guys, TradingProverbs. I like that handle. They sent us a quote from, I guess, Peter Lynch here, saying more money has been lost trying to anticipate and protect from corrections than actually in them. And it's an interesting thought. I've never actually thought of it in those stark terms before. I guess if you add up all of that premium in out-of-the-money puts, for example, and then compare it to sell-offs, it may be right. Of course, there's ancillary benefits to having those puts, being able to sleep at night and everything else like that. So those things not quite factored into a strict draconian numerical analysis, but perhaps Mr. Lynch has a bit of a point. I thought that was an interesting one as well. But we got to keep rolling. It is time for our final segment, the portion of the show where we all embarrass ourselves wildly. Yes, it's time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the crystal ball. When I say this is the part where we embarrass ourselves. We did a decent job of that last week. All of us, including myself, all pretty much 2 handles lower than where VIX ended up being. Right now, as we're finishing up the show, it's right around 11:55, 11:52 or so. So we're literally, I was almost exactly 2 handles lower. The closest was about 1.5 handles lower from Andrew. Kevin, your counterpart there, Mr. Rhodes, he was about 1 3/4 points lower. So I'm going to just declare that a none of us win week, because when you're like 2 handles off, then that's not good. So what that means, that's actually good for you, Matt, or perhaps that's bad, because that means you get pride of place. You get to go first. What are you feeling for VIX this time next week, sir?
I'm a static guy, so I think it's going to be right where it is now.
I'll put you in for like 11:51. I'll put you in for 11:50. Make it nice and simple. How's that?
Good.
That sounds good. So static. Interesting. When in doubt, when the analysis is paralysis, then keep it as status quo. Interesting. Interesting. I was 2 handles away, so I'm gonna make myself go last this week because I don't deserve an earlier spot. Let's go for, let's see, Mr. Rock Lobster, your counterpart was second, quote unquote, closest, only 1.5 points off. So let's go to Mr. Meatball. What are you feeling for next week, sir?
Well, like I said at the top of the show, I think no matter what happens, we get ourselves a 10 VIX. So I'm going to go 10.
Just flat 10. Okay. Okay, none of your 10.13 or something weird like that. Okay.
Nope, just plain old 10.
Plain old 10. All right. And Mr. Rhodes, if you can handle the analysis before your brain explodes, one last thing I'm going to ask of you, sir. What are you feeling for this time next week?
11.99.
Ooh, getting the old some shadows of the old Russell back. Maybe that knock to your head knocked some sense loose in there. You're coming back. The whole upside of Russell is back in action. Well, we got quite a swath here between 10 and pretty much 12 here, listeners. A lot of room for me to play. I too feel lower. I don't know if I quite feel after I got burned by 2 handles this week. I don't know if I quite feel as back in the single digits as perhaps I might have. So maybe we'll go. But I want to give Mr. Meatball some room to play as well. So how about this? I will be charitable because I was also thinking somewhere in the 10 range. I'm going to go a little bit north. I will go 10.55 for this time next week. So there we go. Our picks are in the books. Embarrassment is coming forthwith. There we go. And that music means, unfortunately, listeners, we are done for this week. What a fun week it has been. VIX actually putting some actual numbers on the board in terms of volume and in terms of actual size beyond the single digits, which is, I'm sure, welcome to a lot of you out there. Also saw some interesting analysis of our old friend, the VIX whale. He'll keep on rolling. We'll keep on talking about it. Of course, a little bit of earnings. Going to have a lot more earnings on the docket next week, so stay tuned for that. A lot of straddles popping off. A lot of analysis to be done. And of course, there's always more crypto, more Bitcoin. We'll probably talk the aftermath of all things shut down, if we're indeed at that point. We shall see. And all sorts of other fun stuff. So stay tuned for that. But before we go, let's go back around the horn one more time. Let's start with our guest. Give him pride of place. Mr. Matt, let's say I was inclined to want to check out that data you mentioned about all things earnings volatility. Where should I go? What should I do?
Yeah, it's orats.com. My email's matt@orats.com. I did rerun that back test based on what Russell said, getting out after about 60 days, and it does improve it a little bit, but it's still a little bit of a loser. We have a very robust back testing engine that you could hop on and trial out. So there's a lot going on at ORATS. And then I'll have to get you some of our earnings stuff there, Mark.
Yeah, I love that data. I've been lamenting for years about the dearth of data on all things earnings and straddles and performance. So if you guys are cranking it out, we'd be happy to talk about it, on including this show and on Option Block and on a bunch of other shows. Check it out, ORATS. That's ORATS.com. If you have questions about how trades perform, you want to backtest them, that's the place to go, ORATS.com. Maybe you want some earnings data for yourself, head on over there, kick the tires, and light the fires, as they say. And Mr. Meatball, while they're doing that, perhaps they want to check out a webinar or two on VIX, or perhaps they want to sign up for the forthcoming Prime Meridian Fund. Where should they go? What should they do?
Yeah, if you're looking for a smarter way to be long the S&P, have I got the fund for you? Contact me, mark@optionpit.com. Our new fund is actually, Russell's pretty familiar with what we're working on. I know he can't endorse it, but it is based on research that Russell Rhodes and I did about 3 years ago. Russell did the yeoman's share of the research itself, but it's a really great idea, concept, and we've added a little bit of additional funness to it in that we've got a kind of a hedge over the top. So if you want to be awesome like me and awesome like Russell and awesome with SPX, have we got the fund for you?
Is it called Awesome with SPX? Is that what it's going to be called?
No, it's called the Broad Cap Edge Fund.
I think Awesome with SPX would certainly stand out from a crowded fund field, that's for sure.
It's not a bad name.
And it starts with the A's. You're at the top of the alphabetical listing. You know, there are worse.
Yeah, I like it.
I'm just tossing out the naming conventions for you, left, right, and central. I'll be expecting my check forthwith, especially because, as you mentioned on the last time you were on, that I was the spiritual inspiration for all things Prime Meridian Fund. So I'll be expecting that check forthwith. And last but not least, before he collapses in a pool of his own blood, Mr. Rhodes, what is cooking in the land of the SIBO, sir?
Well, I'm just continuing to do research on how you can use the proprietary stuff that trades here in the ways that Mark Sebastian is using for funds. And and I'll come up with great things, and I will give them to Mark, and he will give me credit, and he will launch more funds.
That is exactly right.
That's the life plan here.
I like it.
There you go. As long as that credit comes in the form of massive checks, then we're all happy here on Volatility Views. Hopefully you're happy too. We had a fun show. We're glad you guys could join us. We'll see you next time for more Volatility Views.
Volatility Views is brought to you by Cboe. Cboe is one of the world's largest exchange holding companies, and we're inspired every day to innovate some of the industry's most powerful products, technology, and solutions. We are the industry's leading force driving access to global markets. A better trading experience and powerful data and analytics to inform better strategies. We're committed to engineering new ways to help our customers realize their potential and navigate the marketplace of tomorrow, today. Visit Cboe.com. That's CBOE.com to learn more about our expanded offerings.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/The Options Insider, or via questions@theoptionsinsider.com.